Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 14th, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice in the previous session, the ES continued to melt down throughout much of the morning, eventually held those losses into the close and saw new lows just before the end of the day. Big time push through the previous month's low. Returning right back to the FOMC key level from January 27th, a couple years back. And again, after we had our compression phase here, we had our major expansion phase and reached those downside targets in a mere 3 days. That's a tremendous 3-day move. If you quantify the 3-day move, it's one of the biggest 3-day moves that we've seen since the initial COVID sell-off. Not only the initial COVID sell-off, but also the initial bounce back after the sell-off. So you have to go way back here to the tail end of this decline and then the beginning of this bounce back to get a 3-day range that's as big as what we saw over the last 3 days. That is tremendous movement here. Again, not seen since the initial COVID decline and bounce back. And again, you look at it here on the chart, a major release of energy out of that narrow range, and we reached the previous month's low very quickly. And as we mentioned before, we still have 36.52.5 to reach down below. That's the previous year's low. And the market's not just going to hit that low and bounce right back. It's going to drive likely through that low by some degree, and then perhaps at some point attempt to recover that low for a bounce back. This market right now has been trending lower since the beginning of the year, so we've had a downward trend like this. Every time we get a new low, it tends to bounce back. So again, we could be close to the lower end of this move, and then we could see perhaps a short-term bounce back within the channel before we see new lows ahead. So right now, very weak overall. Today could be a holding day. Kind of a holding pattern, digestive trading day here as the FOMC 2-day meeting begins today. We have our FOMC statement and rate decision tomorrow, Wednesday at 1 p.m. Central, so we'll get ourselves another FOMC key level. The last time we got ourselves an FOMC key level was May 4th. Right back here, price rallied that afternoon. The very next day, a major sell-off right back down. Once we got this lower low failure, we got to move right back to that FOMC key level and then form that range, and now we've dropped away from that range. So again, the FOMC key level has been right on the money here, at least as of last time. So we'll get another one of those here tomorrow. Ahead of that, though, we could see range-bound digestive movement. Again, not expecting something significant either way right now, but you never know. The overall downtrend is down. And if we do see a pop, it could be an opportunity to sell into that strength. If we take a look here at the NQ, right now the NQ is up about 1.28%. Again, a major 3-day decline, one of the biggest that we've seen in a very long while. That also coming out of this narrow range, a great narrow range that had developed at these highs after the recent pop higher, and that led to a major meltdown over the last few days. Again, reaching the previous month's low price and continuing to fail to find acceptance above the previous year's low, that blue line right there. Every time it's gotten back above that level, back down, tried to hold that level, back down, and we could be looking for further expansion to the downside, which could take us down at least to 11,067. That is the S25 level right there, so the 25% extension of last year's range. Your 50% extension would be down here right around the 99.27 level. So again, we could be looking at tremendous weakness still that takes us much lower ahead. Overall, we could be in a digestive phase today, so today could be a smaller range-bound market ahead of the FOMC tomorrow. Taking a look here at crude oil, we mentioned yesterday that the pullback into the PEMA trigger zone could offer an opportunity to buy the dip. We were seeing an initial reaction to the previous session's low. This was one of the few things that was bullish yesterday as crude oil was able to close the day higher. Right now, after a 3-day pullback, we're starting to see price test the upper end of the previous session's range after holding the previous day's close price. So again, that close price very important. Price is below it being defended, and again, we're seeing the bulls respond to the bullish PEMA trigger zone. Every time price drops into or below that 8-period average here into the PEMA trigger zone, we're seeing a responsive buy phase out of it. So again, we could be looking at a continuation higher toward the 125 to 126 zone up ahead, and overall this market remains very, very bullish. So again, any pullback continues to be a buying opportunity. Bitcoin's down another 4% today after being down about 20% yesterday in one fell swoop. We mentioned before that when a market tends to form this very, very narrow flat range for a extended period of time, it does not tend to turn out well. Instead, you tend to see a big time break to the downside. We talked about this range here and how it broke down, and it had a major forceful move to the downside. That right there was a Sunday Monday combo. So was this one, breaking out of that range and continuing downward. We've now seen new lows here today, hitting 20,775. 20,775. We haven't seen those levels in a couple of years. Again, if you're taking out 28,000, we mentioned that 18K could be next. We've almost gotten there now. 18K is a little bit lower. Again, 20,775 the low end today. We are at S3 on the yearly PivotBoss bands. That is the third standard deviation below yearly VWAP. So yearly VWAP is being calculated here. Yearly value is back at 37,250, and we're now reaching here the third standard deviation below. That tends to be an opportunity to buy in for a shot at returning price to value down the way. Again, this market may not be done. Anytime you get this massive range that develops, you tend to see more of an expansion phase out of it. We could see a move that takes us as low as 15K, maybe even lower. Values down here at around 9,900. So again, we'll see how this plays out, but any type of bounce back here and a failure to recover 28K could offer another opportunity to sell it for a continuation downward. So by no means is Bitcoin out of the rough here. This thing could see a little short-term bounce, but until it can recover back above 28K, this thing could be headed lower still. Looking at Ether futures, this thing was down 25, 26+% yesterday at one point. A massive breakdown of the 1700 level. Friday was the first day that we had seen a close below 1700 in a few years there, or at least a couple of years, and we saw a major release of that energy to the downside. We're now seeing a little bit of a reversal off the lows of the day, still down again on the day right now, but seeing a bounce back at the moment and holding above the previous session's low price as of right now. Overall, this low right now, 1075. I mentioned before, 902 half. So 902 half is the 100% key range target. Very close to that target here, 170 points plus from that target from the current low of the day. And again, this market right now could still be headed even lower than that 907. The 717 level is the previous year's low. We could be looking at a wipeout all the way back to that level. So any bounce could still be seen as a selling opportunity until proven otherwise, or unless we see a significant rejection on these lows. So right now, tremendous release of this energy here from this narrow range, but we could see more ahead. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.